Hey everybody, what's up? Yesterday was Monday, so I was finishing up the new issue of MMT Trader, which was sent out to subscribers yesterday and people who are on the 30-day free trial. If you would like to get a copy of that and also have a look at the back issues, just sign up for a 30-day free trial of MMT Trader. Go to my website, pitbulleconomics.com, and sign up for that 30-day free trial. Remember, I am the only guy who has an applied approach to MMT. There are a lot of MMT theorists out there, academics who talk about MMT. I come from a trader's background. I am an economist who is a follower of MMT, a proponent of MMT, and I have formulated an applied MMT model. In other words, using the principles of MMT, modern monetary theory, to actually make money in the markets. So check it out. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. Now, let's go over the news. Big news, big news. The Trump-Kim summit in Singapore, that has been a success. A little sketchy on the details. However, the two really looked like they hit it off. I was watching the meeting on television yesterday. Really historic, unbelievable. And apparently Kim has agreed to a full denuclearization of North Korea. Now, of course, that's going to take some time. The most important thing is they're talking. It's important to talk. The meeting didn't collapse. They didn't walk away, in a huff. So this is very positive. Now, there was really no reaction to speak of in the markets, but a lot of stuff is happening this week. Of course, the conclusion of the Fed meeting tomorrow, where a 25 basis point hike in the Fed funds rate is expected. All right, we should get some volatility out of that. Thursday, ECB meets, and this could be a very important meeting. It could be the meeting where the ECB decides on a timetable for the withdrawal of its asset purchases. And if that happens, that would mark another central bank coming into the picture with the end of quantitative easing. All right, so far we've had the Fed now for 2.5 years. You got the Bank of Canada, you got the Bank of England. If the ECB comes in, that's big. That's big. Now, remember, everybody is talking about, well, two things. Let me say one thing quick. The ECB's meeting is important because it will have an impact on the euro. And if you have a position on the euro, or if you are considering having a position in the euro, you have to know what the impact is going to be. I spell that out in the report and in emails that I have been sending out. So if you want those emails, again, go to my website, Pitbull Economics, and sign up for the 30-day trial of MMT Trader. Let me just say, as a kind of on a side note to that, the dollar's long-term outlook, and I haven't spoken about the dollar in a few days. I said I was going to leave it alone. You know my position on the dollar. The dollar is in a long-term decline based on a number of factors. Number one, and most of you have this wrong, not my people, not my followers, not those who understand MMT, but rate hikes are not bullish for the dollar, and the Fed will be engaging in rate hikes for some time to come. As a matter of fact, we saw the CPI this morning, 2.7% year-over-year advance in the headline CPI, 2.2% year-over-year advance in the core, that's excluding food and energy. So it's moving up, and you could track it going all the way back to December 2015, where if anyone who was following me at that time knew that I said in advance, as soon as the Fed changes course on interest rates and starts to raise rates, in other words, get off of the 0% bound, That's going to start a new inflation impulse. Nobody said that at the time. Nobody understood that. And actually, it's probably was considered as some kind of economic heresy to say something like that. But you could literally track the inflation impulse from the rise in rates. And that's because a rate increase is a price increase. The cost of credit is reflected in the cost of all goods and services. All right, so it raises the price, the general price level, and that's why, I mean, you could track it. You can go back and see the bottom, the trough in inflation coincided with December 2015, almost to the day or the month when the Fed turned around on policy. And again, inflation is not bullish for a currency. If it was, Venezuela would have the strongest currency in the world, or Zimbabwe would have the strongest currency in the world, or you name it. Argentina would have a strong currency in the world. That's another thing. Rates are not bullish. High rates are not bullish for the currency. Argentina's currency is collapsing, and every time they raise the rate, it goes down even further. You look at what happened in Russia in 2014 when they started raising rates. After the Crimea situation, the ruble started to fall. When the Central Bank of Russia stopped raising rates, I started to become a buyer of ruble, and it recovered. It went from like 80-something to 60, all right, to the dollar. So a lot of people don't understand that. They have this wrong. That's one factor. The other factor is we are seeing record fiscal expansion. This is the money printing that all of these quacks used to talk about. And then you don't hear them anymore talking about that. It's amazing. Like it really is. This is the time they should be screaming, they're printing money. 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 You don't hear any of those guys. And of course, the third reason, which is a big kind of secular, very macro reason, is the de-dollarization. What Trump has done, what Washington has done, because it kind of started before Trump. What Washington has done is engage in this dollar weaponization, these sanctions, tariffs, all this kind of stuff. Which has unleashed a multipolar paradigm, let's call it that. We had a bipolar world for a long time after World War II. Then it was kind of unipolar U.S. hegemony. And what Washington has done with this weaponization of the U.S. dollar, the sanctions, the tariffs under Trump, all this kind of stuff, even allies now. Look at what happened at the G7 meeting. Allies targeted, hit very, very hard, has unleashed a new paradigm, the multipolar paradigm, where you have countries now engaging in trade, using local currencies, or bypassing the dollar. And this is in its very, very nascent early stages. This is going to continue. We're not going to go back. Nobody can go back, even if they wanted to. And now it's become very, very clear, I think more clear than ever after last week's G7 meeting, that the U.S. under Donald Trump and this policy is not going to reverse. In my opinion, it's not going to reverse. They see the risk, and I have been saying this for well over a year. I've been calling it the sword of Damocles hanging over the heads even of our allies. Simply, the world simply cannot have the risk of being shut out of the dollar-based global clearing and transaction system. New arrangements will emerge, not necessarily a single new reserve currency, but it could be, like I said before, all different kinds of arrangements. But that is happening, and that is a long-term thing. It is not going to be turned around. And at the beginning of that cycle, and we're in it, and it will play out over a number of years, will be a decline in the US dollar, a very significant decline in the US dollar as the percentage of dollar-based transactions in trade go down. And that we see that actually happening. We see that happening in the data right now. So the biggest trade, and I am going to end up making the biggest score of my life as a trader, and I've had some very good, very big scores, but the biggest score I will make in my life as a trader will be this short dollar position. I am not getting out. I continue to add short dollar on every single rally, and the dollar is going down. And I have never been one to say, oh, the dollar's going down because we spend too much money and we have too much debt. No, that was never applicable. I've always explained how the fools who said that were just that. They were fools. They were ignorant. They did not understand the monetary system. It had absolutely nothing to do with the United States running budget or trade deficits. All that stuff was nonsense. But this is a very, very different case, what I am describing here right now. And it does imply for a long-term decline in the US dollar. So I am short. I short every rally. I just hold on. I wait. It's going to go down. This is a wonderful, wonderful. This is not even a home run. This is a grand slam, to use a baseball analogy. So we have tomorrow the conclusion of the FOMC meeting. We have Thursday the ECB meeting. Very, very important what's going to happen there. You need to know that. You absolutely need to know that. And Friday we have the Bank of Japan. So a lot of things going on. Not a big reaction today to the Trump-Kim summit. I consider it very positive news. Look, I am anti-war, okay? I am anti-war. Anyone who has kids or just anyone who is alive should be anti-war. One of the reasons I voted for Trump was because I believed what he said in his campaign. He ended up to be a little bit of a disappointment, but it looks like he's starting to come around at least on some things right now. I am anti-war, and I'd like to see him stop these wars in the Middle East, because those have been just unbelievably costly and destructive in terms of lives and treasure and resources. Terrible. I'm totally against it. Got to normalize relations with Russia. But anyway, this is a very positive step. So if you want the full report, go to pitbulleconomics.com and sign up for a 30-day free trial of MMT Trader. See everybody later. Bye-bye.